Welcome, ladies and gentlemen, to Commodity TV and a new episode of our online virtual interviews. We want to get an update from Caledonia Mining, Zimbabwe's largest gold producer, and Mark Learmonth, the CEO, is here with us. Hey, good day to England, actually. How are you?
Very good. How are you?
Thank you. All fine, Mark. Thanks. Thanks for taking the time. I'm a shareholder of the company, and by that way, thank you very much for the dividend, which we should receive, I think, this week, actually. And this is fantastic. Thanks for that. And I think you guys still do a great job, of course. So a lot is going on. You just published your quarterly numbers. They were again a super record. So how was the quarter so far? Are you satisfied? What is going on in Q4? And will you reach your production targets for the year?
Yeah, we published our Q3 production numbers, about 21,800 ounces for the quarter. So as you say, that was a record, and actually, it's a welcome return to form. I mean, viewers won't be surprised that the first two quarters of the year were somewhat difficult. We had some sort of HR management supervision issues at the mine. Nothing fundamentally wrong with the mine. Just that people weren't supervising properly, and that affected Q1, Q2, Q3 came through strongly. And yes, we are on track to achieve our guidance for the year of between 75 and 80,000 ounces. So I'm slightly frustrated it took so long, but we got there in the end.
Yeah, but you make it at least. That's important because times are not easy. What is the cost situation per ounce? Has that improved a
Yeah,
bit? Is it okay
costs.
for you?
No, costs in a lot of our costs are fixed. Very high fixed cost base, as you might imagine, at a deep level underground mine. And so in the first two quarters, costs were elevated. Costs have come down, but we are still seeing, I think, in conjunction with many others, so costs have come down from what they were in Q1, Q2, but we are still seeing the effects of cost inflation, and we're doubling down really quite aggressively now to see what we can do. Inflation is nothing we can do. So cyanide prices have gone up, steel prices have gone up. We just got to accept it. But what we can do is we can try to make sure that we use those resources as efficiently as possible. We minimize our consumption of electricity, and we use our workforce as efficiently as possible. So, it's an area we've never really had to look at that hard before, but we're certainly looking at it very hard now. So we've got a bit of work to do. Our costs aren't out of control. And historically, Blanket's always been a relatively low-cost producer, but it's something we do need to look at, and I'm confident that we can make some progress there.
Okay, super. So what is the situation in the country so far? I mean, we know there has been in Africa itself a lot of coups, I would call, maybe the second spring. I don't know how you want to call it. So how is Zimbabwe? Because we never
Well, they
had
had
any bad news or something like that.
Yeah, Zimbabwe had elections in August, I believe, and those elections resulted in the re-election of the existing or the pre-existing president, Mnangagwa. Whether those elections were free and fair, the people can draw their own conclusions based on independent observers. But critically, for what we want is we want and we need policy stability, and for that we need political stability. And I'm very confident that we have political stability. We've had it for the last 5 years or so, and I've got no reason to believe why it won't continue for at least another 5 years. So we are seeing political stability. We're seeing policy stability, and do you know what? Zimbabwe's actually beginning to turn the corner. Its foreign exchange earnings have gone up. It's cut ruthlessly government spending. So whereas previously 90% of government spending went on wages and salaries, and only 10% went on capital, that's been substantially improved. Foreign exchange earnings have markedly increased. Last year was a record production year for wheat, and also a record production year for tobacco. Which means that increasingly Zimbabwe is now returning to a situation where it's self-sufficient in terms of food, and tobacco being an export crop is now beginning to earn substantial foreign exchange earnings from tobacco. So for the last 20 years or so, the effects of the land reform program instigated by Robert Mugabe have been very damaging. But after 20 years, it appears that these reforms have been put behind us. Production is increasing, and critically, whereas in the old days, tobacco production came from a handful of white farmers. Now it's coming from many thousands of black farmers, and really Zimbabwe seems to have lanced the boil, addressed the burning issue of land reform and land redistribution, which in many other countries is still unresolved. So Zimbabwe, albeit from a low base, seems to be turning the corner, and its economy is recovering, and the government now has a sort of breathing room to be able to stop living this hand-to-mouth existence and actually being able to work in a more sort of sustainable way. So we're actually quite encouraged about the outlook for Zimbabwe.
Super, that's good. Finally, some positive news. That is fantastic. So, how is it going? Let's stay with the positive news because you have installed solar power. How is that going? All well?
Solar's going well. We put solar in because Zimbabwe, in common with many other, well, certainly South Africa, just doesn't generate enough electricity, and so we're very lucky in that it's a very sunny area. So we were able to put in solar plant. That was commissioned sort of late last year, early this year. It provides about a quarter of our average daily usage. So it displaces, and that costs about 1.5 cents a kilowatt hour. That compares to the grid power, which was about 12 cents. Actually, the grid power's now come down because I'm going to talk about that in a minute. And then diesel. Clearly, diesel was anything between 50 and 75 cents a kilowatt hour. So by displacing diesel, that's had a bit of a following wind in terms of helping on the costs. But more generally, we now the grid power that we use, we import using an initiative again initiated by the Zimbabwe government, and so we get a benefit from a slightly cheaper import tariff from the stuff that we were procuring locally. And again, I mean, if you look at the way the Zimbabwean authorities helped to fast track the construction, so we helping us through the permitting process, and we didn't incur any difficulties on the importation of the solar panels. The Zimbabwe government was quite accommodating in terms of facilitating the construction of the solar project. Again, the ability for us to import power directly from Zambia and Mozambique is a government initiative, and it's not the sort of initiative you'd see in perhaps other African countries, which again, we've seen this before. When there is a serious problem, government in Zim can get its act together and can coordinate and work in a joined up manner to deliver practical solutions for people like us.
Wow, fantastic. That sounds great. Let's talk a bit about future. What is going on with Bilboes? What's the development there? Latest news?
Before we get to Bilboes,
Okay.
and I'm very happy to talk about Bilboes, let's look a little bit closer to home. What people may have overlooked is the fact that having got the central shaft finished now, we've got much more underground flexibility, much more logistical capacity underground at a Blanket, which means we've been able to restart our exploration program there. We restarted that in January this year. And a couple of months ago, we published the results, the first phase of that drilling exercise. And something like between 60 and 70% of every hole we drilled came back better, considerably better, in terms of width, grade, and sometimes both of those together. So we're factoring that exploration program's continuing, and we are currently factoring in the results of that exploration program into our resource base and our life of mine planning. But in due course, that will result in probably an extension of the existing life of mine rather than an increase in production at Blanket. Blanket's a little bit constrained. The geographic footprint of the metallurgical plant is a little bit constrained. So, adding an extra 5,000 ounces, allowing it, if we were to sort of process an extra couple of hundred tons a day, that would need us to start adding more mills, more CAL tanks, which would be disproportionately expensive. But extending the life of the mine using the existing infrastructure will, in the long term, be very good for shareholders, because clearly it wouldn't require any capital investment to harvest the gold for longer. So people shouldn't overlook that. And that exploration work is continuing. and we expect to be in a position where pretty much on a quarterly basis, probably interspersed between the financial reporting, we put out drilling results. So that don't overlook that. At Bilboes and Bilboes Motapa, Bilboes, what we're doing is we completed that transaction in January this year. We're redoing a feasibility study that was prepared by the vendors. Now, there's nothing wrong with that feasibility study, but let's recognise the vendors prepared that feasibility study from the perspective of selling the asset, not operating the asset. Now, clearly, over the intervening period, over the last sort of 2 years or so, the gold price is higher, but also capital costs and operating costs are higher, and that the funding climate has deteriorated markedly. As investors, mainly as investors sort of get cold feet about investing in new projects. So we've always said that we would conduct a completely separate feasibility study focused on perhaps looking at a slower growth trajectory, which will reduce the funding need, in particular reduce the need to issue equity, which is highly dilutive, and balancing that with slower growth. Now that work's started. That work that's new work. That's a completely new approach, which will take a little bit longer to do than simply refreshing an existing feasibility study. But we've always been very clear that we're in this business to maximise NPV per Caledonia share. As a shareholder myself, and you're a shareholder, so that's the interest of balancing growth and minimising dilution. We're absolutely not in the interests of chasing a situation where we say double production and double the shares in issue, in which case no one's made any further forward progress, and we just spent an awful lot of time and a lot of trouble going nowhere. So people should understand that approach, and if that takes time to do, that takes time to do.
And could you maintain, let's say, the dividend and also take some money out to finance that in addition, meaning from cash flow, like you did it with the central shaft? I mean, that was brilliant.
Yeah, we're never going to be able to fund the whole project through cash flows. Okay, so if we stop the dividend tomorrow, it's going to take us many years before we could save sufficient cash to bring forward a meaningful project. Okay, so in that context, the maintenance of the dividend is pretty much marginal, but cutting the dividend would clearly trash the share price. In which case, then it just makes it a bigger hill to climb. So it is a balancing act. But the other thing you've got to remember is that we would propose to use a modicum of debt funding for the new project. The debt won't flow unless all the equity is in place. So just putting some numbers on the table. Say you're looking at a project of, I don't know, say $120 million. Say a third of it is equity, a third's equity funded, a third's debt, 2/3 is debt funded. That 2/3 of debt, that $80 million, won't flow unless the $40 million of equity is in the bank. Okay, so that would mean that's a combination of internal cash flows, whether we can realize value from some non-core assets, a modest equity raise, and then that context, once that equity is in the bag, and then the debt flows, then you can maintain the dividend stream as well. So a very long answer to a very, very simple question is at this stage, we can see no benefit from cutting the dividend. We can see a lot of benefit from maintaining the dividend and minimizing the amount of equity we raise through restructuring and reconfiguring our approach to the whole project.
Absolutely. Where do you see the time frame for Bilboes, even if you start on a smaller scale, for example? But what is your, let's say, on your wish list?
The initial, assuming we go on a smaller scale project, that will be done initially to a PEA level, probably early next year. Then we would convert that to a proper a definitive bankable feasibility study towards the end of next year, and then we'd probably start building out a thought the year after that, if that's what happens. And during that process, we would be accumulating cash. So, and let's face it, the current equity environment is pretty miserable. I'm afraid.
I mean, gold at 2,200 would help.
The other thing not to be lost is we're not just talking about Bilboes. Bilboes is a great asset, 2.5 million ounces at 2.3 grams a ton. But we actually think the real sort of attraction here is the Motapa asset, which is immediately next door, which we've got every reason to believe could be bigger and higher grade. So the initial starter project at Bilboes will probably be focused on the resources at Bilboes that are to the south of the Bilboes property, immediately adjacent to Motapa, and then in due course, in the next sort of then 5 years time, we would probably then expect to replace the material that we're using from Bilboes with material that we hope to find at Motapa. So there's a kind of a logical, as you progress down the line, there's a sort of a logical progression to it.
Okay, super. Last question. So Q4, what do you expect from that? All stable?
Q4, I don't think production at Q4 will be quite as good as production was in Q3, but it still shouldn't be bad. And we'll see continued cash generation. The critical thing that we've been working on at Blanket over the course of this year is a new tailings facility. Because we have substantially increased the rate of tonnage throughput at Blanket. Currently we're doing about 2,400 tonnes a day. Previously it was about 1,900 tonnes a day. That means that we've shortened the life of our existing tailings facility, which has then sort of brought forward the need to construct a new one. We've been busy working on that for the last year or so. That's going to cost us about $25 million this year. That's very expensive because under modern environmental regulations, it needs to be double lined with plastic and clay. It's absolutely huge. I was there last week. This thing is absolutely enormous, and it will last us for about 12 to 14 years. So it's about a 13, 14 million ton capacity. We're going to start pouring on that next week. Which means that there's no question then that once we can start depositing on that and finish off depositing on the old facility, there's no impact on our current production. That's been busy, and that's been a cash drain on us this year. But going forwards, the capital expenditure should now begin to moderate as we no longer need to build things like tailings facilities and as we complete the underground development work. So slowly over the course of the coming quarters, I would expect cash generation to remain strong as we stay at 80,000 ounces, keep those costs under control as best we can in this inflationary environment, and see mitigate a reduction in capex. So slowly we should see the cash balance begin to improve.
Okay, super. Well, that sounds all great, Mark. Thank you very much for the update, and I would say keep it going.
Good. Thank you.
Thank you very much. Yeah, ladies and gentlemen, that was Mark Learmonth, the CEO of Caledonia Mining. Yeah, you heard it. Things are going well. Q3 was another record quarter. Q4, of course, also through Christmas and all those holidays will be a little bit lower, but things are well, and you heard it, the investment capital is also shrinking now because they have the new tailings facility done, and a $25 million investment. That's really a size, but also the solar is paying out, and that is fantastic. It makes on the one hand independent, on the other hand it saves money, and that is great. And also for Bilboes, it goes forward. That's what we like to see, what we like to hear. Zimbabwe looks also much better, and you should check out this wonderful company, and don't forget, every quarter you get a beautiful dividend. So thanks for watching us, and bye bye from Switzerland.